Hello viewers, welcome to my channel Chai with Varu. Today, let's dive into a very interesting learning segment, learning about the various aspects of finance. Hi, hello viewers, welcome to my channel Chai with Varu. Today, let's dive into a very interesting segment, finance. I like to start today's segment with a couple of very inspiring quotes. An investment in knowledge pays best interest by Benjamin Franklin. Do not save what is left after spending, but spend what is left after saving by Warren Buffett. Yes, you got it right. We are going to be diving into the various aspects of finance with a very renowned and expert finance advisor and my good friend, Mr. Ravi Padmanabhan. Hi, Mr. Ravi. Welcome to my show today.
Hi Varalakshmi, thank you for your invite.
Thank you for joining in. Let me just introduce you to my viewers today. My friend Ravi Padmanabhan is a wealth creation expert, a stock market investor, trainer, and speaker on personal finance. He possesses 18 plus years of experience in the field of finance, and also he's very passionate on teaching about money management, wealth creation, and investing. He's the founder of www.artofwiseinvesting.com. He started off his career with Citibank and now a very knowledgeable finance expert. In his sessions, he empowers people to handle money wisely, save money, and manage it smartly. He's also a guest speaker in media channels for topics on personal finance and investing, and also writes articles on personal finance in various magazines. He has trained more than 10,000 participants in India and abroad over the last several years on topics related to money management, investing, and wealth creation. And he's among the top 5 facilitators for cash flow game in India. Also a guest speaker for over 40 episodes with NDTV Hindu for their weekly talk show on personal finance. Workshops on investing covered by Live Mint, Hindu Business Line, and also Chennai Live FM. He has conducted a lot of workshops and has been awarded the Magnificent Man Choice Award for Wealth Management by Australia India Academy in 2018. He is also educated from Train the Trainer certification from Success Resources Singapore, and he's from Loyola College Chennai and done his PG from Symbiosis Pune. So happy to have you on my channel, Padmanabhan.
Thank you once again.
Love to get some perspective with regards to investment and lot of personal finance information from you. Uh, I like to start off with a very basic question which everybody has, and how to manage money, right? So that's a very big challenge nowadays, and especially people are literally wondering where to invest. There are many options out now, and we just don't know where to invest. We need to know the right place and the right time. So if you can throw some light on the best investment options.
Sure. So you had asked about the aspects of money management. So when it comes to money management, I would like to share my perspective of what I have observed so far. Is like if you look at the earlier generation, the previous generation, they used to record or they used to write everything. But the current generation, we are more using of texts and apps, so we have forgotten the art of writing. So if you look at the past, like people used to write their budgets in a diary, they used to record all their transactions. So that is a very powerful habit. But currently, what has happened, because we are more moved into the tech scenario, we are not keeping a track of our transaction. The first primary objective is to make sure that if you're wanting to look at attracting more money, is to make sure that you start to look at budgeting very, very seriously. So
Mm.
understand that you need to record your expenses. Find out how much you are earning on one side and how much you're spending on the other side. So there is a need for you to identify how much you save on a monthly basis. This is the first step. The
Right,
first step is to make sure that you have a budget in place, you keep a record of all your transactions and identify how much you save. So this is one of the first things I would say is very essential in terms of money management.
definitely, yes.
Asked about investing. What happens about investing? So what happens is like whenever you're looking at investing, one of the things you need to look at is like identifying your goals. Maybe you could sit down with all the people in the family and understand what are the key financial goals for the family. So it
Right,
could be it could be like, okay, uh, you want to create a retirement corpus. You want to build a sizable amount of money which could help you to generate income post retirement. That could be one of your goals. The second goal is like you might be looking at uh, planning for your child's education, higher education, or post graduation. These are some of the milestones which people have. It could also be like planning for maybe like you would like to buy a house on your own. You might like to fund it maybe 30 or 40 or 50% of it out of it from your own savings. So you need to plan for a specific goal. So identify each goals and write it down on paper and calculate what is the current cost and
right.
find out like what are the ways where you could look at saving it, and how do you look at making sure that your saving starts to grow so that you reach your financial goals without having any worries.
Yes, yes. That gives a good peace of mind.
So usually, if you're looking at child's education, most people are looking at higher education. So like admission in a college or sending them abroad for studies. So if one is able to plan well ahead, then it is quite simple. Because what happens is like when you're having a goal which is say 18 years down the line or 20, 25 years down the line, the earlier you start, the more easier it is for you to reach that goal. So let's
Right.
take someone wants to look at building up a good corpus for the children. So if someone is starting with say like 10,000 rupees per month, and if they are able to do it month on month regularly for uh, every year till the child is around 18, right from the day the child is born. So from the first month onwards, they are investing 10,000 rupees. If they are able to generate a 12% return, which I would say is not very ambitious, it is possible if you are investing in the right investments and equities, a mix of equities and debt. Over a period of time, 18 years, if someone is able to get an average of 12%, the return would be roughly around 50 lakhs. This is before taxes. So I would say like even generating this corpus, systematically one can also look at increasing it. The key is like start investing early. The second thing is like do not interrupt compounding. A lot of times what happens is like people start to once they start investing, they see some returns, they look at withdrawing it, they like to reinvest in something else. So whenever you find some asset, be very, very focused on that particular goal and keep on seeing that whenever you get an increment, whenever you get a pay rise, start seeing that if you can increase your savings also.
I like to know what is the best age to start investment.
Okay. What happens is like there's a saying which I would like to say relate to this was like the best time to plant a tree was 20 years back. The second best time is now. So what I would say is like, if you go by the saying, everyone should have started investment probably right from the day they were born. Either their parents should have invested, or I would say like, if someone is watching this video, you should start teaching investment to your children as early as possible, or
Yes.
make investments for them right from the day one they are born. Secondly, if you are starting now, I would say like, right now is the best time to start, because start with what you have and create a habit, because habits are the most powerful things in the universe. Once you create a very positive savings habit, follow it for a few months, you will find that this will help you on your path towards wealth creation.
Yeah, 100% I agree. Because even if we incorporate this habit in our children, they will get the self-confidence in them definitely, right? That helps them a lot. That's very true. Yes. And also, what are the different kind of investment options apart from the real estate and the bank fixed deposits?
Yeah, if you look at the current options, generally there are, I would classify into four major categories. So what
Oh,
happens was like, when you're looking at investments, in the past, people used to look at gold. Gold has been a very good investment over the last several decades. But if you look at why gold has been such an investment, was like gold was one of the earliest forms of currency. So it also had, it's a storage of value. So people used to go hold gold for a long period of time. They had an emotional attachment. People used to gift to the next generation. So gold has been such form of investment for a long period of time. But if you look at the actual returns from gold, if you look at 1 gram of gold, that was around 167 rupees in the year 1981. Today, if you're looking at a gram of gold, it is coming close to around 5,000. So if
yes.
you've seen the appreciation, how much it has created in terms of growth, if you calculate it, probably you would have multiplied your wealth by around 30 times over the last 40 years. If it's another form of investment, what happens apart from the gold is like the form of fixed deposits or FDs, or you have other options, something like a PPF, which is a tax-free long-term investment option for people in India. So
Okay.
what is the trend, if you are able to notice, is like these have been quite good in the past, but if you look at what you need to really compare is like whether they are able to beat inflation. So
Oh,
inflation is the gradual rise in prices. So something which is worth 100 rupees, if in the next year it is going to cost me around 107 or 108, that means like my money which I'm having as 100 is actually going down in value. Today, the sad scenario is like your returns in your fixed deposits are starting to come down. So today, if you're looking at investing in the top banks, you get hardly less than 6%, 5.25%, 6% is what you get for a 1 year deposit. So if you look at the real rate of returns, it is negative. So this is a scenario where if you're looking at short-term opportunity, sometimes you might not get a very attractive returns in your debt instruments. So what are the other options available? Real estate is a choice. But if you look at real estate, the challenge here is like the starting prices, like someone wants to buy an apartment or something, it runs into almost several lakhs, almost 40 to 50 lakhs is the basic requirement for someone to invest in real estate. And also with the changing trend, what we are seeing is like a scenario of work from home is there. The requirement of people also changes. And if you're looking at the real rental yield in real estate, it's quite low in India. So real estate has given returns in the past, but if you look at the recent, it also, if you look at the observe the recent trend, real estate has been not performing for the last 5 to 7 years. From 2013, real estate had been sideways, and also you're seeing a decline in prices because one, the IT, which was a key driving force for the real estate, is no longer seeing a huge growth happening. And two, there is a changing trend in terms of people who are now currently working. For them, buying a home is not a priority. So real estate returns have been coming down. The other investment option is into equities, where if you're looking at equities, in 1981, someone had invested in the equities. If you look at what is the price of the Sensex, and if you compare what is a current price, you would have almost multiplied your money by around 320 to 330 times. So
Wow.
in the long run, equities will give you very good returns, but you need to be understanding what is the time, because equities are very volatile too. Because a lot of people have lost money in equities because they entered at the wrong time. At the same time, one needs to understand that certain asset classes are very volatile. It doesn't
Right.
go up in a straight line just like an FD, because in an FD there is no risk.
Yes.
So it goes up like every month you see your deposit increasing in value, but it doesn't happen in certain other asset classes.
Okay. Okay. Um, and so you think sorting the stocks is also a good investment option?
Okay, when you are asking about shorting in stocks, I would say like that comes under the category of speculation. It's slightly an advanced concept. I would not suggest retail investors to look at shorting stocks, because shorting is like you are selling something which you don't have a position. Like if you're holding, say, let us take 100 Reliance shares, you think the stock prices are going to go up, what you do is like you buy stocks. But you feel like the stock prices are going to come down, what you do is like you sell first and buy it later when the prices fall. So this, I would say, is like it is slightly an advanced concept. It is not meant for retail investors unless you
Okay.
understand the dynamics. Because if you are doing it in the wrong market scenario, you might end up losing a lot of money too.
Yes, yes, that's true. Like you said, yeah, definitely investing in house or child's education. What do you think investment in the perspective of gold?
So what you need to understand is like whenever you're looking at your financial goals, you should look at breaking it down in terms of the what is the specific time period. It could be like a short-term goal, it could be like a medium-term goal, or it could be a very long-term goal. Short-term goals are goals which are probably like less than 1 year down the line. Say like you want to take a vacation, or you want to buy a new gadget, or you want to buy a car, any goal which is like less than 1 to 2 years, that I would
Right.
categorize as a short-term goal. Then the second category comes as a medium-term goals. These are goals which are roughly between 2 to 5 years down the line. Then there are long-term goals. Long-term goals are some goals which are 5 to 10 years down the line. Then there are some very long-term goals. Might be someone who is currently around 40. He might look to retire at an age of 55. So that is 15 years down the line. These are very long-term goals. So when you categorize them according to the time frame and also arrange them according to the priority, then you know like these are the different goals. So you need to understand like what particular vehicles or asset classes which will help me to reach these goals. So if you're looking at it, there are different options. Like traditionally in the past, we did not have much of options. Like people used to maybe have like some savings. They used to just invest in PPF or bank deposits, because if you look 20, 30 years back, the rate of interest in a bank itself was around 12%. So PPF was during the 90s, it was offering a very high rate of return. So, and also people did not have much opportunities to invest in financial assets. But over a period of time, what happened was like we are now in a scenario where there are multiple opportunities. Like for example, if you're looking at long-term wealth creation, there is a very good opportunity to use like investments like equities, investing in mutual funds, which can help us to compound our wealth in a much better way compared to traditional investments.
What do you think is the fundamental reason people lose money in the stocks? Is it because of the lack of skills and the knowledge they are about the market fluctuations, or what is it?
So if you look at one of the statistics is like 90% of the people lose money in the stock markets. Only 10% are actually able to make some money in the long run in the stock markets. The main reason why this has been the truth across markets for long periods of time uh, is like majority of the people uh, who are coming into the stock market, they do not have much of understanding about what is the prices, how the prices are moving, what are the basics of the stock markets. The second important thing is like whenever you're investing is not a game of numbers. It's a game of understanding of human emotions, and people are unable to understand that what is the time when it is too much of greed in the markets and when there is too much of fear in the markets. So what happens is like people whenever greed takes over, they forget on the underlying facts. They look at buying something which is very expensive, and whenever fear takes over, like what we have seen in the last couple of months back because of the COVID. In the month
Mm-hmm.
of March, there was a huge correction in the markets. A lot of people sold off thinking that it's going to be impacted. But if you look at 3 months down the line, we have very much recovered from what has happened in the month of March. So one thing is like you have to be very sure, master your emotions. So I'd like to quote Warren Buffett here. Warren Buffett says like someone asked Warren Buffett, what do you think is the most important uh, way where or a technique to be successful? And Warren Buffett says is like be fearful when others are greedy and be greedy when others are fearful.
um, also, across my friends, we had this common question: what is the number one challenge they faced in terms of managing money? And like we discussed, the lack of budgeting, and you have given wonderful insights about how that could be managed. Also, what some of them are trying to understand or feeling it is a challenge. Um, the one a lack of knowledge, then time to manage, and prioritizing goals. That if definitely, like you said, you have to prioritize your importance and the goals, and that's where you can allocate the resources, the money accordingly. Definitely. Uh, but the main thing is, the income and the income that they get, how to compromise on certain things, and how to just manage money with the income that you get. That's the main focus a lot of them have been asking actually.
So what happens is like one, the we need to understand that the income which one is having right now, it depends on what are the skills, what are the value someone is offering to the market. So if you are able to increase your self-worth as such in terms of your ability to sell more, in terms of your ability to serve in a particular area, in terms of enhancing your skills, you would start to look at attracting the income which you can desire. So what one needs to do is like the number one skill what they can everyone should do is like start investing on their skills, because most of us what happens is like after we pass out of college we rarely look at upgrading our skills. So one needs to constantly keep upgrading. Just
That's
like
right.
a mobile phone comes out with new versions, one needs to look at upgrading our skills. So I would say like invest around 15 minutes a day, which is 1% of your time in learning about something. Learning about something which can enhance your core skills. Like
Right.
if you want to look at understanding about finances, start spending 15 minutes a day. Maybe watch YouTube videos. You watch specifically like maybe TED videos. So these are all areas where you specifically look at understanding the subject and start to enhance your skills. As you're slowly moving up the ladder, you'll start to find that there are more opportunities. Maybe you get a promotion in your job. Maybe you find an ability where you can do something on your own. So start to look at way where you can improve your earnings and also look at basic money management. First, you need to look at not making mistakes, because a lot of times what happens is like we make blunders in terms of money management. Understand there are money has certain principles. One needs to understand those principles and follow it. So some of some mistakes is like you might have a loan, you might not have been, you might have some balances in your bank account. You might not have used this to close a loan. So these are all some of the mistakes. Like some people look at, they have idle assets. Like they would have invested in something, but that is not working out for them, and
Mm-hmm.
it would be idle. So one needs to evaluate. Maybe if you're not understanding much about finances, find someone in your family, maybe in your friend circles, or maybe seek help of a professional to guide you in terms of these areas. Because what happens is like uh, every rupee you save today, every rupee you save today is much more valuable tomorrow. So one
Yes,
needs to start early and make sure that you start to understand at least the basics about money handling.
definitely. The money that you save will help the generations after you, your children, grandchildren, definitely. Yeah, in terms of long-term assets and everything. Um, also, can you suggest some good money management techniques that worked for you?
Okay, so if you're looking at money management techniques, I would like to say like the first thing is like invest in your learning.
Right,
Because one of the things with one of the books which really inspired me on this journey is a book called Rich Dad Poor Dad. This is a book by an author called Robert Kiyosaki. I started to read this book very long back, almost 17, 18 years back, when I was just out of college. I was just reading this book and I learned that there were so many things about money which I learned in my school or I learned from my parents, and or what I learned were totally untrue. So by reading this book, I started to understand like if you look at what happens is like we are trained to be employees. We think in an employee mindset. Our education system is designed for people to be working for someone else. We are not trained to be an investor. We are not trained to be like entrepreneurs. So what happens is like this book really gave me a change in my mindset, and I started to look at what are the ways, how do I reach my financial freedom. Because what happens is like 90% of us end up being either employees or self-employed. So what one needs to do is like first thing is to start investing in your learning. What the second thing I would like to say is like from your earnings you need to save minimum 10% from whatever you earn. You have to move it to savings. So what happens is like this is a very powerful habit, because a lot of us have a habit of like you earn money, you spend whatever is left behind, you save. Because when you do that way, at the end of the month, you find that you hardly save anything because the expenses fill up your entire budget. So the best thing is
yeah,
like you earn money, you save minimum 10%. The first thing, whenever your money comes in from your salary or from your business, move 10%. Balance, you make sure that you take another 10% reinvest in your learning. Maybe take 10%, maybe you allocate to charity. Balance you need to manage with only 70%. So this is a very important rule.
that's
Third thing
very
is what you need to do is like you need to make sure that you have a basic term insurance, because insurance is sort of a risk cover. Because a lot of times what happens is like people look at making a mistake of buying an insurance, but they end up buying too little cover, or what they do is like they buy the wrong insurance. They end up paying for a policy which doesn't even cover their risk, nor they get good returns. So this is the third thing. Make sure that you have a term insurance, because the term insurance is the cheapest form of insurance. The next one, the fourth thing which I would recommend for all the viewers, is to make sure that what you should do next is to start looking at what are your goals. Start looking at opportunities where you can look at growing your money. Maybe you could start looking at, you can consult a financial planner, or start on your own, where you can look at making your money work for you. Because a lot of times what happens is like money is not working for us. It is
Yes.
lying idle in the bank account. So when it is not working for us, it means like inflation is eating our money. Because if you're saving money, certain times people who are saving money, the inflation is actually eating away our returns. So one needs to make sure that the money which is available in your bank account is able to grow. So this
Right.
is the one thing which you need to do.
Sure. Yeah, definitely. In fact, a lot of my friends were saying that they can't stick to a budget, always. Even I have this problem because, for example, I plan a budget and I'm going to decide I'm going to save this much. But it so happens I also indulge in impulse buying, which I definitely do not recommend anybody. And I know it's pretty bad to indulge in impulse buying when you go out for some shopping and you don't stick to a budget. You buy, like I go to buy, my daughter's birthday clothes, but I end up buying something so much more which I really didn't want, but I just liked it.
One thing, if you're looking at having an impulse spending habit, is like write down a list. Whenever you do shopping, you just write down a list of items you want to shop. Make sure that you don't enter a shop without a list.
That's very true. Yes.
And second thing is to make sure that whenever you're spending money, don't do it on a credit card. Give physical cash. You
Yes.
get
Yes.
physical cash, because what happens when you give physical cash, you feel the pinch that the money is going out. So it's a
Yes.
conscious trigger. Like whenever you start to change this habit, suddenly you'll start to notice your brain starts to register that you're spending money.
Yes.
Whenever you're spending money, then you suddenly notice it and you become awareful of your spending. So start moving from an unaware spending to a conscious spending habit.
Yes, that's very, very true. Yes, yes. Um, like Coming back to our stocks, I'd like to know the difference between trading and investing. Do you suggest intraday trading, or what is the basic difference you say about between trading and investing?
Okay. So a lot of people have this confusion. What is trading in? What is investing? So investing is like, let us take you have some X amount of money. Let's take you have 100,000 rupees with you. Uh, Whenever you're investing money, you are only buying for the value of stocks or any investment up to the money which you have.
Okay.
So what happens when you're buying for 100,000? You can only buy for 100,000 worth. But
Yes.
whenever you're trading money, trading is an option where you can look at even borrowing money. So there are systems available, there are accounts available where your broker or there is a margin facility available where you can borrow money against what you have as an investment or the cash which you have. So trading is called speculation. What happens in speculation is like you are expecting the price to go up immediately in the future. So that's why you're looking at taking leverage and looking at trading it so that you end up making quick money. Trading has been a very, very tough game. If you look at the averages, 98% of people lose money in trading. Very, very few people have been successful in trading for long periods of time. I'm not saying trading is bad, but trading requires tremendous amount of skills. I don't do trading because I find like investing is having more peace of mind. It gives you like you buy something, you hold for as long as the company is doing well, you need not worry too much. And also in
Yes,
investing, what happens is like even if the price comes down a little bit, you don't, there is no panic for you to whether to sell this particular stock or the business, because it already you're paid in full for whatever you've bought. So
that's
when you're
right.
investing, there is a lot of say like you have peace of mind. You don't have too much of worries about what is going to happen tomorrow, what is going to happen in the other economies, what is going to impact the particular investments.
That's true. That's true. Um, and the golden rules that you would recommend people for investing.
So first, one of the few things I would say is like ABC of investing is like avoid borrowed capital. Avoid
Wow.
capital. Don't borrow money and invest. Remember that this is one of the first primary principles. Invest only your surplus money. Let's take if you're investing in stock markets or investing in equities. The first thing you have to remember is like don't invest money which you uh, require in the next 3 years. Invest money into that particular uh, asset what you would not require in the next 3 years. So invest only your surplus money. So these are some of the rules. I would also say the next thing is to look at diversification. It is like you spread across into around 8 to 10 different ideas. Don't put all your eggs in one basket. Next, stick to the best leaders. Stick to companies which you know very well. You know, these are companies which have been profitable, which have been having a long track record. You know the companies. Stick to the top one or two best companies. Don't look at unknown names in this business. And the fifth one I would say is like look at what is the honesty of the management, what are the corporate governance, because these are very, very important things. Because the long-term interest is always dependent on how strong the management is and how ethical they are. Exactly is financial freedom. Financial freedom is a state where you're no longer dependent on an active income. It means like your income from your investments is able to take care of your lifestyle. So let us take someone living in India. Their expenses are roughly around a lakh of rupees a month.
Okay.
So that means like they are having an expense of around 12 lakhs in a year. So if this person is having 2 crores invested in the bank account, earning 6%, he will be able to generate that 6 lakhs worth of, sorry, the 12 lakhs worth of expenses at 6% per year. So 2 crores is the basic minimum for someone to reach financial freedom, calculated at 6% rate of interest. Let's take another scenario. But this expenses will keep going up over a period of time. So someone spending a lakh of rupees, say in 10 years down the line, his expenses will almost double to 2 lakh rupees. If you're looking at around an inflation rate of around 7% or so, probably in 10 years down the line, his expenses will double. So what happens is like you need to make sure that the money which you have in the kitty is also able to grow in such a way that it is able to cover this expenses. So what one needs to do is like build this corpus. So what are the ways where one can build this corpus? It's like one is like if you're someone who's having a goal which is say 10 years down the line, you can invest a good chunk of your savings into long-term investments such as equities. Uh, these are assets which can grow and compound your wealth over a period of time. So if you look at the Indian markets over the last 40 years, we would have seen that the average return from equities has been around 15%. So if you're looking at bonds, I would say like debt investments, they are able to generate in the current scenario around 7% roughly. If you're looking at slightly taking aggressive corporate deposits, they are able to generate something in the range of around 8.5 to 9% also.
Okay.
So one should have a mix of, say, equities, a mix of bonds, based on the market valuations. One can look at increasing their allocation, and also as they are approaching their goal, they should look at reducing their risk and making sure that this money is able to grow at a much faster pace.
Okay. Now, what percentage is a good mix? Like, what is the position of gold right now? What percentage is a good mix?
So one of the things about gold, what I've learned from my mentors, one of my mentors says this is like a lot of people have got rich and they have bought gold. People don't buy gold and get rich. So gold is not something for wealth creation. So if you look at gold prices, gold previously hit a high of around 850 per ounce, $850 per ounce in 1980. After that, for a period of 18 years, gold did not perform. So gold almost from 850 in the year 1980, it fell all the way to almost like $270. From there, gold rallied and it hit 1950 to a dollar in 2013. So what happens is like gold also is a very cyclical asset. So currently what is happening is like we are again seeing a slight rally in gold, because gold has, from 2013 onwards, it did not perform for the last 5 years, and only in the recent, say, 2 years, the gold has been rising. So if you're looking at gold, I would say like use this as a hedge against the US dollar in case US dollar has some issues, because the central banks are printing a lot of US dollars. So you should look at gold, maybe allocate around 10 to 15% of your portfolio into gold. There are good options, like in India, you can buy gold in form of sovereign gold bonds, which RBI issues, which gives you 2.5% interest rate also. Or if you would like to buy it in form of uh, uh, online, you can buy it through mutual funds. Much better than buying jewelry, because jewelry you have prices which sometimes you end up buying a lot of wastages also. So investment
Right.
in gold, make sure that you get into the right form of gold.
Yes, that makes sense. Actually. Um, I like to know how to generate sustainable passive income.
Okay, so passive income, if you're looking at what we have discussed earlier in terms of financial freedom, is something where you get income from your investments. So what
Right.
are the ways where you can generate passive income? Let's take one of the cases where you get a interest from your deposits.
Right.
So that is one form of passive income. But what happens is like when you are getting interest from your deposits, that is also taxable in the hands of the investor. So that means if someone is in a 30% tax bracket, he ends up losing 30% as he has to pay as taxes.
Okay.
So the other forms of, let us take, if you're looking at in shares, one form of income is like finding out companies where it pays a very good dividend.
Okay.
So roughly, if you're looking at companies which are having a dividend yield of around 5 or 6% or more, these are all companies which pay a very good dividend. So that means out of 100 rupees you're investing in a particular stock, the company pays you around 5 or 6 rupees as dividends. So dividends are what you receive in form of cash.
Right.
So currently what happens is like there are certain good PSU companies which are offering high dividend yields. some of the companies are even offering around 8 to 10% dividend yields in the market. But when you're investing in dividend, make sure that the company is able to sustain itself, because sometimes the dividends might be based on the profitability. So look for
Yes.
the long-term growth, where these are all the companies which are doing well, and they are able to generate a reasonable amount of dividends. And apart from the dividends, you also look at what is the capital appreciation potential of these companies.
Definitely. Yes. Um, I like to know if you can suggest any good stock for long-term perspective.
Okay, if you're looking at long-term perspective, one of the things when you're looking at the stock market is like always look around and find trends what people are using. So if you look back at many of us, we would have started using, we would have bought a mobile phone maybe 15, 20 years back. The first phone we would have bought something like, we would have bought an Airtel collection. If you looked at that time, the Airtel stock used to trade at around 50 or 60 rupees. Had you bought the stock also at that time, and you would have seen that stock touch almost 800 rupees in a matter of 5 to 6 years time frame.
Right.
So what you need to do is like, you need to be very, very observant of what are the trends around you. For
Right.
example, like most of us would have used Amazon or Facebook. We would have been consumers of this particular service, but there is also an opportunity for you to be taking ownership, like buying stocks of Facebook or Amazon, because these are being very, very profitable businesses which have made huge money for their shareholders.
Right.
So what you need to do is like start observing things. One of the things I would say is like stick to the very best companies, the top 1, 2 companies, because these are opportunities where they create maximum wealth for the shareholders. Say if you look at the case like we have seen in India, like Maruti. Maruti is a very great wealth creator over the last 15, 16 years. So stick to the best companies because they create enormous wealth for the shareholders.
Great.
Do you conduct online workshops too?
Yes, we do workshops. Workshops we started off in 2007 onwards. For the last 13 years, I've been doing workshops. Recently, we have also moved into online workshops. So what workshops we specifically do is like, we do a program called Art of Investing,
Okay.
where we teach people on the different aspects of investments and how they can look at creating wealth. There is another program which we do on stock markets. This is called the Only Profits Investment Workshop, where I teach people on how to select stocks, how to create a portfolio on their own, and how to grow their wealth.
So, can you recommend any good finance books? Do you suggest any good book?
Yeah, but I would recommend 2 or 3 books. So one of the books which I would say is the book called Rich Dad Poor Dad by Robert Kiyosaki. This gives
Okay.
you a broad idea about understanding about money. A very good book which I also read is a book called Richest Man in Babylon. The Richest Man in Babylon. It is a book written in 1921. And this
Oh,
book is about the principles of uh, one of the most prosperous civilizations called the Babylon.
okay.
So this is a very wonderful book. I have read it multiple times, and I've learned every time I've read it, I learned a lot of nuggets of wisdom from it. And the third book, if you're looking at investing or understanding about stocks, is a book called One Upon the Wall Street. This is by a very famous fund manager called Peter Lynch. So this
Oh,
book is a book like for people who would like to understand more about stocks. It's more like fiction. You will understand story. It's much better. You will be able to relate to investing if you're interested in this. I would say these are the 3 books I would suggest to the audience.
Oh, thank you so much. Thank you very much for sharing all the valuable insights on finance to the viewers today. I hope the viewers will definitely learn a lot of the information that you've given, and also the books that you mentioned. They and especially about the stocks, which you said it's like fiction. I'm sure it will be very easy to comprehend when we read that. And thank you so much for giving out your valuable time and sharing all the information in my channel. Thank you so much for joining in.
Thank you all for the wonderful opportunity, Varalakshmi, and also wishing all the viewers a wonderful journey ahead on their path towards prosperity.
Thank
Thank you.
you. Thank you so much.
To learn more about the online workshops conducted by Mr. Ravi Padmanabhan, please visit www.artofwiseinvesting.com. Thank you for watching. If you like my video, please leave a comment below. Please like, share and subscribe to my channel Chai with Varu. Also, don't forget to press the notifications bell icon. See you again with another new video. Take care. Thank you for watching. Bye.